The metaverse is designed for supreme human interaction. It's not just a standalone technology designed for creating alternative worlds. It can create a lifelike reality. Many brands are already taking advantage of the mass immersion into virtual reality. One of the best examples for this is Coca-Cola. The company was quick to recognize the potential of the metaverse as a tool for re-establishing a connection with tech-savvy youth. Blending utility with nostalgia, Coca-Cola's debut NFT drop is an iconic case study for brands that are looking to ingratiate themselves with the metaverse. Sports apparel brand Nike cemented its influential position in the nascent metaverse when it launched Nike Land, a branded, virtual interactive space. As a whole, Nike Land has helped to prove the huge commercial value of the metaverse, while simultaneously proving that a huge number of fans are genuinely keen on branded experiences in virtual environments. Known for its outlandish Twitter feed and proclivity for keeping in touch with the zeitgeist, fast food restaurant chain Wendy's has also been enjoying some notable success in the metaverse. It was quick to capitalize on the huge popularity of Fortnite with the release of its own branded game mode called Food Fight, in which players are challenged to rid the world of frozen beef, an objective that was intentionally aligned with Wendy's model of never serving frozen beef. The winds of fashion are also blowing in the direction of the metaverse. Luxury brands like Gucci and Balenciaga have already launched experiences on the metaverse. And last year, clothing brand Forever 21 launched Shop City, a virtual playground on Roblox where users can shop for virtual clothes and curate their own stores by setting up displays, creating kiosks, and choosing designs to feature. In the Shop City Roblox experience, Forever 21 created a virtual black beanie hat that proved so popular, the company will physically produce it and sell it in their stores. The virtual beanie is one of the company's best-selling items of all time and is on track to sell over 1.5 million units in the metaverse. When companies think about engagement, it's often with an eye toward converting users into consumers. Many legacy brands are finding ways to further realize the value of their memorabilia, logos, and other intangible assets virtually. Businesses have poured investments of $77 billion into metaverse mergers and acquisitions in the past 18 months, as they vie for a slice of a market predicted to be worth $800 billion in just 2 years. Video game companies are especially attractive targets for companies seeking to buy into the metaverse. There was some head-scratching across the big tech and gaming worlds in January, when Microsoft announced an agreement to buy Activision Blizzard for $68.7 billion. The deal would be Microsoft's biggest ever, and one that places a major bet that people will be spending more and more time in digital worlds. Microsoft CEO Satya Nadella framed the acquisition as a boost to the company's growing metaverse strategy. Even though Activision is best known for blockbuster games such as Call of Duty, World of Warcraft, and Candy Crush, but not the mix of AR or VR and other technology underpinning the fledgling metaverse. Upon close inspection, however, Microsoft may now be better situated to become a leader in both the metaverse and gaming realms. Video games are not merely entertainment anymore. They have become technology that is used today to try to shape our future. And Microsoft buying Activision Blizzard stoked a new round of intrigue about the metaverse, a concept on firmer ground in online gaming than anywhere else in modern life. The metaverse, in some sense, begins in the multiplayer lobby. The global metaverse market is projected to reach $28 billion by 2028. Few, if any, emerging technologies receive as much hype as the metaverse. Such is the excitement that 40% more companies mentioned metaverse in their company filing documents during the first quarter of 2022. The growth of the metaverse market is expected to be aided by the expansion of the metaverse on social media platforms. Meta is without a doubt the biggest company going all in on the metaverse. Meta bought Oculus in 2014 for $2 billion. At that time, Zuckerberg predicted that Facebook would become a metaverse company where people could share not just moments with your friends online, but entire experiences and adventures. VR headsets replace the user's natural environment with virtual reality content, such as a movie, a game, or a pre-recorded 360-degree VR environment that allows the user to turn and look around. Just as in the physical world, we could see a breakthrough in VR headsets very soon, a version light and smart enough to be worn every day. Meta's Oculus Quest is the top-selling VR. It signifies the growth of the AR and VR industry in the world. Facebook made a lot of news following its rebranding as Meta, and after spending billions on the Metaverse, its stock has taken a beating. But still, Meta is one of the world's most valuable companies, with 3 of the biggest social media apps, Facebook, Instagram, and WhatsApp, used by billions of people. Meta and many other tech giants are focusing on how they will develop hardware and applications for the Metaverse, and how their customers might benefit. Meta describes the Metaverse as the next evolution of social connection. In its simplest terms, the Metaverse is a network of 3D virtual worlds that use technologies, such as virtual and augmented reality, to help people connect in richer ways than are possible in the traditional, flatter internet. So far, connecting people appears to be Meta's primary goal with its Metaverse. Zuckerberg has noted that feeling truly present with another person is the ultimate dream of social technology, and that's why Meta is so focused on building this platform. You'll move across these experiences on different devices: augmented reality glasses to stay present in the physical world, virtual reality to be fully immersed, and phones and computers to jump in from existing platforms. The idea of a huge virtual online world is certainly exciting, and hundreds of companies have seen the apparent potential that the Metaverse holds. Metaverse projects are blooming, and some companies are betting big on them being the next big thing. But while the cash invested by big tech means the Metaverse is likely to become successful eventually, the challenge of filling the human field of view with a realistic and immersive image space is an incredibly hard problem to solve. The big question is it wise to invest in the Metaverse? As it is often the case when it comes to investing in any emerging technology, significant uncertainty goes alongside the potential. Investors can expect volatility as the Metaverse develops. The present institutional backing in this exciting space could be a positive sign for potential investors. A sensible approach to gaining exposure to an entire industry is to buy a basket of different companies through an exchange-traded fund or ETF. Unfortunately, there aren't many Metaverse ETFs available yet. There is one option, however. Roundhill Ball Metaverse ETF, which launched in June 2021, has major holdings that include Roblox, Nvidia, Meta, and Unity Software. The fund has an expense ratio of 0.59%. Technology stocks have been battered this year. The key culprit is investor concerns about how higher interest rates might impact these companies' long-term cash flows, while rate fears may continue to drive volatility in technology shares. Recent market volatility may distract many investors from the long-term potential embedded in the innovative tech companies that are shaping and powering the future. But tech is the fabric upon which today's economy is built. Secular growth trends, such as digitalization of industries and an ever-growing reliance on data analytics, were accelerated during the pandemic. The Metaverse is just one reminder of the vast opportunity driving long-term return for investors across the technology universe. Whether or not you should invest in the Metaverse depends on your risk tolerance and whether you believe the technology will materialize. Ultimately, determining whether to allocate capital to the Metaverse is not unlike deciding to invest in any other exciting new technology. It depends heavily on an investor's risk tolerance, knowledge of the space, and hopes for the future. Don't forget to leave a like and subscribe for more. World of Finance TV has videos every Monday and Friday.